Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Monday, October 2nd, 2023. I know I keep repeating myself, but again, it was an extremely interesting day. The breadth in New York of the market remained pretty much in a negative stance all day long, but yet, we ended up higher. But yet we see the market just continue to do what it does. It's an amazing thing to watch. And it's just, I continue to notate along with other friends who are also analysts on these changes that we're seeing and how or what it begins to affect and what really is something to hold on to. In other words, it's like this is something that we can build on in terms of a rally or a decline, or is it really following a realistic path? Or many different questions kind of come up. Now, against this backdrop of everything that we saw happening today in the equity markets and primarily in the NASDAQ, where the Dow was down well over 100 points and they buy it right back up. The S&P down for most of the day, and then they buy it back up at the end of the day. The NASDAQ, which flirted with, being, unchanged to slightly higher, to being very high, to being sold back off, and the Russell getting slammed. The Russell sold off all day. So when you're trying to just put it all together to form a picture of like, well, what is really going on? It doesn't really make sense. But nonetheless, here we are. And so my task is to try to interpret this on an Elliott Wave basis, based on what I see, based on Elliott Wave, and based on what I think the market can do going forward. So I'm going to begin with the NASDAQ. And against the backdrop, if you were paying attention, against the backdrop of interest rates ticking higher. So the bond market, the treasuries going lower still, finding newer lows still. The 30-year bond making new lows in the future today, pushing the yield yet higher today. Now, it's a wholly different thing, granted over there, we do got something else going on within the bond market. And there's a couple of things that really do play out. You've got a lot of stuff going on in the credit markets, and that's a whole different conversation. So sorry for digressing and just kind of taking a quick tangent over that, but I happen to look to see that basically, the 30-year bond is down over a full point, but yet they're still standing here buying this in the NASDAQ. They're buying Apple, they're buying AMD, Amazon, Broadcom, Google, Meta, Microsoft, Netflix, NVIDIA, and Tesla. The usual suspects, to be honest with you. So, but again, it's just first day of the month, right? New month, new money, right? 401k money. This is what we do. So it becomes very almost rote. It's like, okay, first of the month, here's my money. Put it into the market. Put it to good use. I'm an investor for the long term, et cetera. Whatever the situation is, it just seems to happen. So pre-planned. And if you're putting it into an ETF, if you're putting it into a mutual fund, if you're putting it into whatever you're putting it into, a hedge fund, that hedge fund operator, the hedge fund traders must put that money into the market. If it's a long fund, they must go long. If it's a short fund, they must go short. Whatever it is, they have no other choice because that is how it's been constructed. Again, let's begin here with the NASDAQ. Now, my bigger picture really has not changed at all. So I'm going to start here on the hourly chart. Now, what I am seeing, it continues to really be a fourth wave. Intraday, if we're just watching these moves, you're like, oh my God, look what they're doing. Suddenly swing the NASDAQ up 30, 40, 50 points, and then drop it 30, 40, 50, 60 points, and then run it back up as the flow of capital moved in and out of the markets today. The volumes were not necessarily heavy. Like, let me just take a very quick look to see how did it end up at the end of the day. We had at the end of the day 756,000 NASDAQ, E-mini contracts, 1.5 million of the micro. So by the end of the day, it wasn't bad, but a lot of that coming in and coming actually into the afternoon session, it was still like 300 to 400,000. So a lot came in at the end of the day. So, and it just got pushed. It just got rallied. And, we're seeing again, what they're putting it back into is really neither here nor there. The reason for the buying really shouldn't have any effect on how we are going to choose to trade. And it doesn't. But I did another program today, and part of what the conversation was is that it truly isn't trying to, I know people try to pin it's bullish, it's bearish, it's bullish, it's bearish, and that type of analogy to put into the market. But I have to tell you how things are trading and what is creating those trades is not necessarily has anything to do with being bullish and bearish. It has everything to do with, in the options world, has everything to do, where's the premium? How high is the premium? How high is that volatility? Because the higher the volatility, the higher the premium in an option. And as a X options market maker, even today, the traders, the market makers in these particular options, that's their bread and butter, folks. It is selling premium. Now, hedging, if you're selling call premium and you're selling the calls, the hedge is you buy the stock. If you're selling the put premium, the hedge is to sell the stock or the underlying. So we see a lot of that going on where, retail, oh yeah, or even day traders, 0 DTE options are just coming in. These things expire at the end of the day. But they're going to come in and they're moving the markets. And they're very popular. So again, these intraday moves and just everything that is contributing to the markets, and when we're trying to compare it to something in the past, because much of that has changed. So again, coming in today, I had felt that I had marked this level right here as the completion point for minute wave 4, and we were starting down, and that still can be the case. There still can be 1, 2, but now in a very extended type of a 2, but it's extremely messy. It's extremely messy. On the hourly chart, it's extremely messy right in here. But it's still, to me, this is what I'm putting as the alternate. So I'm showing you the other view, an alternate view of what the market possibly is up to. That what I marked as wave 4 was actually just wave A of 4. And this is wave B of 4, or that's just A, B, and we got a C, or, this is B, and we're working a C wave now, but then what was all this? So again, complicated. We got to let the market tell us. Now, if I put the 4 back down here and put this back as the ABC, right? A, B, C, just like I did, that still may work. 1, 2. Are we doing it again? Possibly. Is it more is it more extended in terms of that 1 and this internal small 2? They got pretty dang close to going up there, breaking back above that high. But as soon as they did, look what they did after. 15,044, and where did they drop it? They dropped it over 140 points. Look at his split. Yang, yang, get out of the way. Bang. Then dropped it even more. Almost a total of 200 points from the high. And then what did they do at the end of the day? They brought it back up 140 points. It's quite amazing to witness and how they're doing it. Now, as a day trader, I'm going to tell you right off the bat, you just give up any reasoning, any whatever, and you trade price action. Not always the easiest thing in the world to do because they jerk it around quite a bit, but These moves, you just jump in. And next thing you know, you're up 100, 2 or 3 or 4 or $500 and you're out. That's a pretty damn good day trade. So it's there and the money is there. So if you can jump in and you can just trade without giving care as to what they're doing. Because the goal, remember, the goal, if you're a trader, the goal is you want to make money. You know, and if you can do it every day, great. So do you care who's buying or why they're buying or who's selling or why they're selling or what's really going on outside of all this? No, I'm just trying to capture the moves. But I am now going to try to fill in the blanks for the Elliott wave picture. So the Elliott wave picture continues to suggest to me that it is corrective. Now, I know I moved the 4 and put it way up there just to keep it out of the way, right? Because I got to let this all play out. Now, if indeed this is an A and this is the B, and we're still working some very strange looking C wave up, 0.618 is 15,113. Equality, or C equals A, is at 15,294. But we're beginning, not that we're encroaching on that one, we'll begin to encroach on wave 1, which is at 15,342. All right. Wave 4 cannot overlap the price territory of wave 1. Remember, we're correcting the third wave. So it's already getting a little big. Rule of alternation is kind of going by the wayside a little bit. But these are all some of the changes that I'm witnessing and seeing when it comes to applying Elliott to our market. You know, where a lot of the expectations, the rule of alternation, some of the main rules, for example, you know, that wave 4 cannot overlap wave 1. Wave 2 cannot go beyond the starting point of wave 1 because then it's not a wave 2. So, you know, just some of the different things that we got kind of going in. But what I'm seeing is some different variations. You know, more 3 waves, more 3s where you're looking for 5s, and they have to work. So we are seeing some changes. But right now, I have to let this play out. I still think it's corrective, but I have to let this play out. Now, I have people that are telling me, no, that was the 4th wave, and now we're just going to go to new highs. I was like, can I say no to that? I cannot. That's not what I'm counting. That's not what I'm looking for. But hey, if that's what you're really feeling, hopefully you're trading it. And you're going to make money. So it ceases to really be more of who's correct, who's not, you're wrong, I'm right, et cetera, et cetera. I don't, that makes no difference to me. I really don't care. What I do care about is being able to get in there and to trade and to make money. And I care about how this is going to all play out and being able to just put in some analysis in terms of what is going on. So again, this may seem, 1, 2, 3, 4, 5. That's an A wave. So we're going to get so going from more of just an ABC, it's gone into 1, 2, 3, 4, 5 A. This likely still going to be part of B, and B is going to come back down, and we're going to get a B, and it's going to be more protracted and prolonged for a C wave up. Now again, what in essence it is all going to turn out to be, yet to be determined. I may have to really back this thing up and really take a look at from here. Because if it does come in that this is only 3, and then you do end up working through a 5, 3, 5, or just a 5 and all that keep going, then I got to go even further. Then I'm taking it all the way out to here. And what was that? So this is this an ABC? And if it is, of what? There are a lot of questions that can be had out there. And again, there's no relationships anymore between what the equity markets are doing and what the treasury markets are doing, what the dollar is doing to what the treasury markets are doing and what the equity markets are doing. Everything seems to just kind of decoupled at periods of time. We're moving in, and we're moving in to the high tech today. We're moving into the Magnificent Seven because that is what will survive. If we're going to go into a slowdown, if we're going to go into a downtrend or whatever, the premise is that these 7 stocks will go down in a lesser percent than the overall market. And therefore, the asset manager, whomever, will be a winner. Strange things. So when I bring it out here to the 4-hour chart, it kind of still holds its shape a little bit. So I'm going to give it a little bit more. Excuse me. Now remember, I did have, and I can put those back up again. Well, let me just see if I can get that. Oop, and now I'm going to bring it down. I'm going to put in retracements. So I still, 15,150 is a 50% retracement. For a wave forward, a little bit much, but hey, possible. Very, very possible. There's some that have said to me, well, maybe this is just all wave 1. I'm like, what, 1 of 3? That could, it'd be 1, 2, and then maybe what, 3, 4, and then I'm not sure how, but what if it is? And this is a wave 2 of 3. And then you are looking for something to come up into these levels. So again, I would have to review it. I'd have to look at it. I'd have to really scrutinize it to really put major changes in. But right now, even as a wave 4, it has additional space. And there's wave 1, 15,346. So can it get up here? Yeah, it can. Now, I really would not expect this from a C wave because in terms of the wave 2, it's now pressing against 618. And I'd be hard pressed to consider it a 4th wave if it got up that high. But up this high, a little bit above that, yeah, I could see it. Well, we're going to have to wait and allow the market to kind of come into play here and work this out. And then I will be able to go back and there will be a count, trust me. Right now, I'm leaving it as it is. So bringing it back down to the hourly chart, what would I look for tomorrow? Again, it could be much of the same. If we really take this day, this is Friday. This is all Friday's trading. This did nothing but a big but inside day. Crazy as it was, inside day with swings in both directions, vicious swings in both directions. But look at it on an hourly chart. Inside day, big old box. So let's not get too excited just yet. So I got up to here. If it truly just kind of gives up the ghost and it breaks, then it remains ABC A, B, C, 4, 1, 2, and we're off and dying. Those are the 2 scenarios that I have available. Downside, it would break 14,819, which was that low. 14,660. And this low, 14,578. 586, excuse me. And begin to head down to here. 14,396. 13,498 ultimately. Minor 3, 100%, 14,396. 1.618, 13,500, we'll call it. Possible, very, very possible. All right, let me just take a look at the daily chart so we can see and take a peek at these moving averages. Didn't really do anything, did it? Here's the 200s going flat, pretty much in line with what the market. Here's the 50s going flat above the 20 even, still kind of angling, but getting flat above the market. But they were both heading lower. These were heading lower. It was just really reacting to what the market did today. So the daily is still in a pickle, so to speak, but it's still in more of a downside. We're going to wait. We're going to see. Over in the S&P, very much the same story, but guess what it did? It actually did come down, and it did break below 43.03. And then it failed, found support down here at 42.95, and it really needed to continue to break and get below 42.77 to begin to put in. This was the 4, and we're down 1, 2. God only knows what all this was during the day. But, I will still tell you, I do still go over to that line chart, which is on a closed basis, and look at this. Brings the 4 back to here. ABC 4. 1, 2. 1, 2. Now I'm putting out, it's the same thing that I did in the NASDAQ. Could be a series of 1, 2s coming off. But I want to show you the alternate view that I have going on right now. And that's what I'm showing here, which would suggest in this market in the S&P, not going up much higher than what that original level, that original 382 level for wave 4, which was 43.87. Now it's got bumped up to 43.85. Whip-de-doo. So if it goes back up, then this is a level. Not that much greater. So if this is ABC-A, ABC-B, 1, 2, get a 3rd, 4, and a 5, we end up here, put a C wave, put the 4, and we're done. So for a change, the S&P is much cleaner than the NASDAQ. So I tried to, first I did this chart, and then I went over to the NASDAQ and thought, okay, let's try to make head nor tails out of what the NASDAQ did today. Much, much, much more difficult, much not clean at all. But if I had to put the call out to say, okay, what do I think is going to happen tomorrow? I think that, yes, we still have the ability to put in. And I presented this on Saturday, actually, when I did the podcast, on the possibility that we had a more extended 4th wave. And still, even coming in, that what the market, because we were here, and then we traded up to here, and then we started to come down and overnight. And then they just rallied. So again, the negative breath in the S&P, it's just like, it's stunning, is to see it that high. And a good friend of mine who you guys, if you been in my trade room, Dan Ascani, and Dan was telling me, he's like, oh, he's got to go look at years and years of data that he keeps to find any other reference where there was this type of a move and this type of a market on such a huge, large negative market breadth. And so again, we're going to let this play out. If it just turns from here, 1, 2, 1, 2, and just goes right on down, it's got to break 43.77. That kind of puts the seal of the deal to me on the fact that this 4 comes over here. I know, I know that I did discuss in the podcast the potential that we might get an irregular, and that brought us down, I think, to 42.45, and then shot back up to like 43.87-ish. And I can't tell you that is off the books, because it's not. So we do have some variations, some alternates, but they're all within a 4th wave, and we're still looking for that larger, and I'm still looking for the minor 3rd wave to finish, and then we get minor 4, which again will bring us up to wherever this thing tops out. That's where the minor 4 is going to get right back up in there. If we come back down into here to finish minor 3, then we got to rally back up, and then we're going to come back down again in a minor 5, and that's just going to complete intermediate wave 1, and we get to do an intermediate second wave. And we still have, don't forget, we got, we're rolling slowly into earnings season. And now we've got the conversation, and the conversation is nothing more than status quo. Well, they're going to have great earnings. Earnings are going to be great, and interest rate, don't worry about them. They're all fine, blah, 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 blah. And it's like, eventually, guys, you're all going to get caught up in your own hype. What you think the markets are just going to continue to roll with fantastic earnings. No consideration. Who cares about inflation? Who cares about higher interest rates? These corporations are so inflation proof, blah, 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 blah. They might be, but I'm looking at just basically day to day, and I'm not going to play it against what somebody's thinking is going to come in 4 weeks or 3 weeks. The banks are going to blow the doors off. Really? Last time I checked, a lot of banks are going to be getting themselves into trouble. Consumer debt, commercial real estate. The conversation doesn't get talked about very much, does it? We'll see. But here we have it. Going back down to the hourly chart, what can we look for tomorrow? Well, under this, I'd be looking for the development of 5 waves up. And it should be pretty quick. I'm going to 1, 2, 3, 4, 5, maybe get up to 43.87-ish. But definitely would want it above 43.71, 72. So logistically, it tells us to get right here. We've got the 200s kind of hanging out right there at that 70 level, so it might not get that much further. Gets up there, stops, makes a slight new high, and then turns once again and comes back down. So moving averages, go take a look at that daily. Okay? They're still playing around these 200s. They broke them, they took them back, they broke it, they took it back, they touched it, stayed off it, they broke it, not by much, and bought it back. It's kind of like playing with fire. That's what I think. You're playing with fire. Or this is a Russian roulette in the S&P. And I wonder who's going to win. We shall see. But got to let it play out. So I'm going to go leave it right there. Nothing really has changed. And we're waiting for the market to tell us what is up and where we're doing. Day trading, still a good market. We'll see. And that's going to be it for today. The next update will be on Tuesday, October the 3rd.